Hello friends, very good evening. My name is Proshanjit Haldar, and in this video I will explain about the rules of journalizing, how to make journal entries. So let's start the video. There are two types of approach for making journal entries. Here I have mentioned the name, or I have given heading rules of journalizing, in which I have mentioned here the traditional approach, and second is the modern approach. Traditional approach is also called as golden rules, and modern approach is also called as diamond rules. Now I will come to golden rules. There are three types of accounts. In golden rules, first is a personal account, second is a real account, and third is nominal accounts. But it is seen in some books that there it is mentioned that there are the two types of accounts. First is personal accounts, and second is impersonal accounts. And then after ahead also mentioned there that impersonal accounts are divided in two types of accounts. First is real accounts and nominal account. Second is nominal accounts. So conclusively, there are three types of accounts in golden rules: personal accounts, real accounts, and nominal accounts. Now look forward to personal accounts. There are three types of personal accounts. First is a natural personal account, second is artificial personal accounts, and third one is representative personal accounts. And firstly, we have to understand what is a personal account. The personal account is the account which relate to an individual, firm, company, or an institution are called personal accounts. And now come to natural personal accounts. Natural personal accounts means the accounts of human beings. As for example, Mohan's account, Sohan's account, Sima's account, etc. And in this category, proprietors capital account, proprietors drawings account, debtors account, creditors account also come. Now come to artificial personal account. Artificial personal account, if I tell you people that these accounts do not have physical existence like human beings. Human beings has a physically existence, but artificial personal account B takes those type of account which have no physically existence. They while they work as personal accounts, but they have no any physical existence. As for example, we can take any firm's account, any limited company's account, any institution's account, any bank's account. These are the artificial persons for the recording of business transactions. These accounts also include the accounts of club, insurance companies, and the accounts of government departments, which are recognized as persons in business dealings. Now come to representative personal accounts. Representative personal accounts are those type of personal accounts which represents the personal accounts. When an account represents a particular person or a group of persons, it is termed as representative personal account. As for example, if salaries for the month of December or November are not paid to the employees, that amount should be payable. But actually the employees earn that salaries already, but we haven't paid to the employees. So that amount will be added and put under one common account that account will be salaries outstanding account, because we haven't paid that salaries amount to the employees. So we will take some total of amount in an account. That account will be salaries outstanding account. This account represents the accounts of all the person to whom salaries have to be paid. So this is termed as a representative personal account. And prepaid insurance account, accrued interest account, unearned commission account also come under this category. Now come to real accounts. Real accounts related to those accounts, or real accounts are related to those assets whose value can be measured in terms of money, and which are the properties of the business, or business as term as real accounts. For example, cash account, furniture account, machinery account. Cash account already there is no need of explanation about cash, that this has no value. Cash has value, obviously. And the furniture also sold and purchased, that's why furniture has value. Machinery is also purchased or sold, that's why machinery has also value, monetary value. Building account as well, and goodwill also purchased or sold, that's why goodwill has a value. So these accounts belong to real accounts. Now there are two types of real accounts. First is a tangible real account, and second is intangible real accounts. Tangible means we can touch, we can felt, we can measure, and we can purchase or sale. So those type of real assets, those type of assets which can be measured or purchased, touched, those are called tangible real accounts. As for example, cash account, stock account, building account, furniture account, land account, etc. And the second is intangible real accounts. Intangible accounts, the intangible real accounts are those type of accounts which represent such things which cannot be touched, but of course their value can be measured in terms of money, like goodwill account, patent rights, patent account, trademarks account, copyrights account, etc. Now look forward to nominal account. Nominal accounts are those type of accounts which belong to expenses and incomes. As for example, salaries account, salaries is expense. Rent account, rent is also can be income or expense. So it will come under the head of nominal accounts. Salaries also, salaries can be paid or can be received. That's why it also belong to nominal accounts. Now discount allowed account, discount receivable account is also belong to nominal accounts, because discount can be given or can be taken. And bad debts is also belong to is also a nominal account because it's a loss. Here I have given a note and in which I have written that DR is an abbreviation of ADBTR or and DBR. Actually, that is the verb form of debit used in Italian and Latin languages respectively. So DR is a symbol, or you can say DR is an abbreviation used for debit. And now look forward to the rules of debit and credit. So I have mentioned their personal accounts, real accounts, and nominal accounts. In personal accounts, their rule is debit the receiver and credit the givers. That means those accounts which receives some money or something. Actually, all the transactions should be related to monetary transaction, and that means related to money. So debit the receiver personal account if receives, then we can debit that account, and personal account if gives something, then we can not can we will credit that personal account. Now, in real accounts, debit what comes in and credit what goes out. That means real actually related to assets, properties. So, if a properties comes to you, then you will debit that account, and if a property goes out, then or cash or any kind of assets goes out, then you will credit that account. Now come to nominal accounts, debit all expenses or losses. That means if expenses or losses occurred in the organization, then you will debit those expenses or losses. And if incomes or gains occurred in the organization, then you will create all incomes and gains. And now once again I have mentioned one note. That is about a bank account. Bank account is a personal account, that artificial personal account, not a real account. Because sometimes students assumed bank that bank is a bank is a real account, but actually it is wrong. Bank account is a personal account, not a real account, because a bank works as an artificial person. That's why bank account is a personal account. So now these all about rules of generalizing. I have only discussed traditional approach, golden rules, and in next video I will explain about modern approach, diamond rules. And if any people or students after watching my videos gain some knowledge or some help, please give us a like, and also click on subscribe button and bell icon button. Thank you. Thanks for watching.